This morning on BRN, Wall Street and the stock market react to the end of the presidential election. And joining me now to help break it all down, as usual, Jane King joins us from the NASDAQ. Jane, always great to see you. Thanks for joining us this morning.
Jeffrey, great to be back.
All right, let's talk about the presidential election. And I don't necessarily care about the politics. I'm very interested in the reaction from markets. So let me get your reaction first, and we can kind of break it down.
Yeah, well, we saw a huge reaction, not just in the stock market, but a lot of different markets. Of course, the day after the election, the Dow was up 1,500 points. It was the biggest gain we've had since April of 2020, when the markets were starting to recover from the big sell-off that we had from the pandemic in March of that year. But we also saw oil prices down. So the thinking is there'll be more drill, baby, drill. And so more supply of oil. So oil prices fell. Chinese stocks were lower based on expected tariffs. Solar stocks fell on the thinking that there'll be less green energy. Bond prices were higher, but because the thinking is that we may be seeing some more inflation. So anyway, a lot of markets really had a reaction to this. Cryptos, Bitcoin hit an all-time high. So I was kind of like keeping track of all these different markets that they think will change. I mean, I think there's some real big change coming with the Trump administration.
Yeah, and again, we're not trying to advocate just for the viewers for any particular sector. You got to do your research and you got to invest for the long term. So I just want to preface everything we're saying. I should have said that at the beginning. Jane, we've spoken in the past about split government, and the market likes, or traditionally has liked, split government. By that I mean one party occupies the White House while another party maybe occupies either the Senate or the House or both. Reaction to that, because as of our recording, that it seems to be that one party will control both branches of government.
Well, traditionally, markets do like that kind of gridlock in Washington, but I am sensing things may be a little different this time. There seems to be a real will and to be able to cut spending and get rid of waste in government. And that may be harder to do if there's a split government. The debate about it, what to cut, that may slow everything down. And so, with Elon Musk is supposedly the Doge, the Department of Government Efficiency guy, and but not just him, but other business leaders want to get involved. And I've been here, Paul Tudor Jones and some other really famous investors have been talking about our government spending is out of control and it's unsustainable. So I think that plus the regulations may be, kind of reined in and made more common sense. All of those things will be easier with one party, and so that may be why the markets have been reacting so positively.
Yeah, and just going back to the market increase that we saw post-election day, is that related to the candidate, or is that more like markets like certainty? And therefore, now that we have a new president, now that we have an understanding of what the government will look like, does that translate into the increases that we saw post-election?
Well, I think it has to do with the policies that are expected. Less regulation, streamlining of government, maybe, some of these geopolitical events that we've been experiencing over the past few years may get resolved. Just, kind of a look at things and like a new kind of fresh look at the world, and
Mhm.
that, what we've been experiencing in the past few years changing, and that may be for the better. Sometimes we get optimistic and things don't happen like we think. So we'll see what actually happens. But I think the markets are anticipating some of these things being fixed that they've been complaining about. A lot of the FTC regulations. Tech, for example, sees a lot of opportunity for mergers, particularly in AI. So just a lot of different business sectors reacting to the result that we got on the election day.
And this dovetails nicely into the conversation that we previously had, but it'll probably air after this conversation, which is November starts typically a really good time in the market. This seems to be in line with that conversation. And I guess I'm kind of teasing it because it will definitely follow our post-election
Yeah.
conversation.
Well, and typically on election years, presidential election years in particular, we see the markets go up between the presidential election and the end of the year, and it has been the case since 1980. So you compound that on to the already historical trend that we have for the month of November and going forward for the next 5, 6 months or so. And you've got a lot of historical things that are working in the favor of the market right now.
Let's talk Fed, Jane, because you can't talk markets without the Fed. Let's talk about Jerome Powell, recent press conference. What's going on there, and what could we see? I don't want to ask you to prognosticate the future. You don't have an 8 ball. I don't see an 8 ball on your desk. I should probably get one because I always reference that joke. But in all seriousness, what can we expect now from the Federal Reserve coming up?
Well, they meet again in December. Of course, in their November meeting, they cut interest rates by 1/4%. So smaller interest rate cut than what we saw last time. So we don't know what they're going to do in December. The Fed chair was kind of cagey about that and didn't really talk about how they saw things, what he expected, more rate cuts. He was very keeping his options open, we'll say. So, that was, kind of surprising, maybe a little bit disturbing to the market that there wasn't more clarity. But I also think they're keeping an eye on things. I mean, we've seen inflation get under control, but it's still kind of lurking out there, especially in housing and, some other areas, car insurance. So maybe they're just, kind of staying quiet until they get some more data and have more clarity on how things are shaping up.
Yeah, Jane, I'm wondering if those job numbers may be revised up. If you recall, I know you recall this, but for the audience, job numbers not so great the week leading up to the election. Hopefully, we get some better numbers, more private sector jobs being created, less job losses, fuller employment.
Yeah, only 12,000 jobs created in October, so it was pathetic. It was much lower than expected, and we even were accounting for the hurricanes and the strikes that were going on at Boeing and that short port strike. But still, the market much lower than expected. Manufacturing got hit really hard. So we'll see what the numbers are. Is that just a 1 month kind of blip because of some of these extraneous events, or the November number that we'll get the first Friday in December? We'll watch very carefully.
Yeah, well, Jane, always great to talk to you. And I know all the local outlets that with whom you work are going to be so interested in your analysis. It's going to be a fun time for you, I'm sure, but before January 20th and just following the markets. Jane King, always great to see you. Thanks for joining us. We look forward to talking with you again next week.
See you then.
And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place. Details, of course, at our website. And we're back again tomorrow for another edition of BRN. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.